Hi, this is Zach Meir with the weekend edition of the Bulletin Board Heroes. It is Sunday, the 24th of April. Starting off with Avacta, where we have had many opportunities to get into the recovery here. First, we broke that line of resistance there from February and March. Then we broke another one from December, around 55 pence the end of March. And then the final time, which is the one I can remember the best, the dip to the 50-day moving average, and then the rebound with the initial target was at that time around £1, which seemed to be rather ambitious, and then the really ambitious target was up to £1.50 at that September resistance line projection. Current situation is that I suppose it looks as though we may have hit the top for now, but at least while we're above that last April peak there, intraday high around £1.26, there's still a chance of a fresh break of 150 and then heading up to that July resistance line at the top of the broadening triangle as high as £2, maybe by the end of next month, something along that sort of time frame. But the key here is that 126 does hold, and that would then allow the shares to try and springboard to new levels. On to Borders and Southern, which is not the easiest of stocks to get a handle on. It tends to be sort of in a rather congested kind of action there. We had a lot of that, obviously, pre-January, and again over the course of March, April. But current situation looks as though the shares are happy to close on a high and above 3 pence, which is a resistance line there from last year. See the shares head up to 5 or 5.5 pence, which is a resistance line projection, which I'm going to try and go back to show you from way back in 2020. So above 3, looking for 5 or 5.5. for Borders and Southern at the moment. You've got the 50 and 200-day moving averages rising, and also a very long uptrend line in the RSI window, which has been multi-tested. That does suggest that we could head higher along with those dips, 3 main dips there, through a rising 50-day line. So the structure there for Borders looking pretty strong over and above the fact that the shares closed up 30% at the end of the week. Another stock which is a bit of an investor favorite and has been for a little while now, maybe a couple of months, is Echo. Nice turnaround there after that early March bear trap. We had an uptrend line, divergence line there from March, and breaking the resistance in the RSI window around 42 in the second week of March basically got the stock on the road to recovery. But a rising trend channel there from December, top of the channel there heading for 0.75. Weekly close above the 200-day moving average, a big plus last week at 0.53, and the longer we stay above the 200-day line, the greater the chance of 0.75 maybe by the end of next month. Moving along to another favourite of private investors, hasn't gone as much up as gone up as much as they might have wanted, but maybe another chance now. The shuffle just above the 50-day moving average at 0.63 looks encouraging, and if we can get a break of that February resistance line at 0.69 during next week, that could be the trigger for a move not only to 0.8, which was the resistance earlier this month, but up to 1.2 maybe over the next 4 to 6 weeks. So looking pretty well poised there, especially given the way it looks as though the 50-day line is also rising with the 200-day moving average. Only back below the 200-day line at 0.58, really getting us back to the drawing board in terms of hoping that GBP will go higher. Next up, a stock which I always thought was going to have a big breakout. Spoke to the company, I think, even before it listed. But here we've got a situation where above that initial resistance there at 3.4 pence, Mila's shot through that over the last week or two. We've got a resistance line there heading towards 5.5, and it has to be said that looks like the minimum on the upside at the moment for Mila. Could very well be the case that we're in a rising trend channel, which I'm trying to draw at the moment. And that could give us a target way up towards what it looks like sort of 8p, 7.5 pence maybe over the next 1 to 2 months. So 5.5 the initial target there, up to 7.5 maybe by the end of June, and all that while we hold above that initial 3.4 pence resistance for the stock. On to power metals, which despite having an RNS almost every day, seems to be finally recovering after an extended sort of decline since this time last year. Here we've got the first signs that the 50-day moving average is rising, which is normally a good plus at the end of a bear run. Broken a line of resistance there from August as well, around 1.37, let's call it. And above that, we could be heading towards at least 2p by the end of next month, especially given the way that with the higher lows that we had and the shuffle along the 50-day moving average over March and April, the RSI is tracked much harder, so it does look as though this is a turning point for power metals, and let's hope it is. Moving along to Quetzal, which is, as I said, I think on a tweet at the end of Friday, is up sort of 30% over the past week, which is very healthy. We've got the 50-day moving average rising. We already had that break of that January resistance line around 3.75p, and a bullish divergence line as well. So it's had everything to flag that there was going to be a turnaround. I'm looking for 7p over the near term, so maybe over the next 2 to 4 weeks, something like that, especially while we hold above the 200-day moving average at 4.8p. After that, obviously, one can dream of greater glories. Above 7p, actually, one could be justified in calling the stock up to 12p, which would be the top of a wide rising trend channel, as I've just drawn now. So the floor of the channel there at 3.3. Top of the channel towards 12p. 12p maybe on a 2 to 3 month time frame, or perhaps a touch sooner. On to Rurelec, which I may have looked at during the week, but might as well just have another look again today. Here you can see the shares clearly broken the 0.6p resistance level, and the longer they remain above that, the greater the chance of 0.9 or 0.95 by the end of next month, which is the top of a broadening triangle. We've got the 50-day line now starting to rise as well, which is normally a good sign. Onto a stock which has taken a long time to get its act together after being in a bear run from July, August, a double top there at 1.2p over the summer. But with this bullish divergence line, which I tweeted out about, I think at the end of last week, things looking rather better. Also broken out of this falling wedge, or sort of broadening triangle, actually, I suppose it is in a way. Falling broadening triangle, and closed above the 50-day moving average at 0.42. The longer we stay above that, we were all totally above the 50-day line on Friday, the greater the chance of 0.6 at least over the next 2 to 4 weeks. But again, this is a bear trap reversal, and backed by RSI divergence, so it looks pretty strong now. Another winner over the last few days has been Sound Energy, and the longer the shares remain above the initial April resistance of 2.5, the greater the chance of a move towards 3.5. That seems to be the minimum now on the cards, given the way that we've got the 50 and 200-day moving averages both rising. And in fact, if you were an optimist, as I sometimes am, you'd probably be projecting the shares up towards 4.5p at the top of a rising trend channel that I've just drawn in that way from August last year. So above 2.5, as high as 4.5 over the next couple of months on Sound. Just a couple of stocks to go. Again, another very much followed stock here, coming in the form of TomCo. Here we've got a wide rising trend channel from basically May last year. Good support here, multiple support points here over the recent past at the floor of the channel just below 0.5, and that does suggest that we can not only break that resistance line there at 0.57, but then head towards the top of the range, as we do periodically anyway on this kind of situation. A bit of a heart trace monitor type of charting pattern for TomCo, but at least now it looks like we've bounced off the bottom of the range, which might tempt some near-term traders. Back to that liquidity pool, which is otherwise known as the as Aquis. So here we've got one of the better performers on Aquis, Valereum, and here it looks as though the week ended on a positive note, which I think is something that fellow chartist Noel Borg pointed out over the weekend, or just in the last 24-48 hours. Here we're just breaking that line of resistance there from June. Also toying with the 50-day moving average as well. So we had a Friday totally above that particular feature at 37.25. So that does bode well for the near term. I think we're waiting for some news there anyway. So above that resistance line and above 37p, looking for up to above 37p, looking for 60p over the next 1 to 2 months, which is basically the top of the post-October range. Only really back below 30p would now delay the upside scenario, and that looks rather unlikely given how many times the shares have bounced off the 30p area over the past year. That's it from me today. More updates during the week.